This past year has been an incredible year for myself. I'll throw up some payouts from last month on the screen here. This isn't to flex or to brag, but rather to show the potential with what I'm gonna be teaching you guys today. So you're looking to get into trading, or you're already a trader, but you wanna make sure that 2025 is your year. In this video, I'm gonna do a full breakdown of how to reach your trading goals in the year of 2025. Now, I trade solely crypto. This is what's worked for me. I think for 99% of you guys, you should trade crypto and that's it. Okay, now that you've decided that you're gonna be trading crypto, you need to understand the difference between spot and leverage, meaning buy, hold, and sell, or intraday trading. Depending on your portfolio size, I'd recommend more in spot than actual leverage trading. Now, when you're trading spot cryptocurrency, meaning buying, holding, and selling, you need to make sure you're getting in the right projects. So how do you find the right projects? Well, you need the right information. Inside of my long-term channel, inside the Discord, I've called pretty much every major altcoin at the very bottom. I called Pepe before 20x. I called Doge at under 10 cents. Name anywhere else where you can throw 10K in a project, walk away, and come back a year later and have 200 grand in that project. How many people make 200K trading in general, right? Like, how many people have made 200K trading Forex in general, let alone starting with 10K, okay? This is the power of trading cryptocurrency. I also bought Solana sub $20 a few years ago. That also went up 10x. You can see the potential there. The only downside to spot is that there are market cycles, meaning there are periods where the market goes up and there are periods when the market goes down. Spot is very good for when the market is going up, like right now, but sometime next year, I expect a bear market, meaning you're not gonna be making money buying and holding coins in the bear market, okay? Most coins go to zero, like I said. So that is where you actually need to learn how to trade. And this is where we get into leverage trading. The first thing you need to understand when you're trading with leverage is key levels. What is a key level? A key level is a level with price history, okay? Key level equals zone. I'm gonna say zone with price history. It's not an exact level, it's a general zone. Now, people can call this supply and demand, people can call this support and resistance, whatever you want to call it, it's all the same shit. What we're looking for are areas of interest on the chart where we're seeing price respect a certain zone in particular. So if I look at Pengu here, this is a random token I pulled up, I can see that this marked zone that I have laid out is a level with price history. Okay, I can see we bounced from this level once, twice, failed, and reclaimed this level, bounced again. So if price were to come down to this zone, I will be looking for a long position once again. Our job as traders is not to predict the future, but to react to the future. So it doesn't mean I'm gonna take a short down to this level. It means if price comes to this level, I will look for a long position. Okay, another key level I have marked out. Same thing, right? We bounced from this level once, twice, failed this level as resistance, 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 and now we flip this level. So I'd be looking for a retest of this level to continue the trend to the upside. What am I doing? I'm marking out my key levels or my zones with price history. Very, very simple. Okay, this isn't rocket science. I'm just marking out levels. Cool. Next thing we need to understand is general market structure. Is market structure bullish or bearish? Well, market structure is bullish. How do we know? Price is making higher highs. To find a market structure, go to a 4-hour time frame. If price is making higher highs and higher lows, you are in an uptrend. If price is making lower lows and lower highs, you are in a downtrend. If you're still unsure of whether the trend is bullish or bearish, go to the 4-hour time frame and pull up the 200 EMA. Next thing you need to know, key fib levels. What is a fib level? I'm using the built-in Fibonacci retracement tool. I'm drawing it from the swing low to swing high for a long position if structure is bullish, or from the swing high to the swing low if structure is bearish for a short position. The level you want to watch for is the 0.618 and 0.65. This is referred to as the golden pocket fib. This is the main fib that I look to take trades off of. So we have bullish market structure, we have a key level, and we have a golden pocket fib overlapping that key level. What does this tell me? It tells me that there's a lot of confluence at this level, meaning if price comes down to this level, I am going to be looking for long positions. So how do you actually enter a trade? Well, there are two types of trades that you can take. You can take a market entry or you can take a limit entry. A limit entry means that you set your entry in advance. If price comes down to this level, whether I'm on the computer or not, I am going to get filled. Pause on this position, right? This is one way to take a trade. Okay, it's entering with limit positions. If you're going to enter with limit positions, I'd highly recommend dollar cost averaging. DCA just means multiple entries, essentially. Okay, so when price comes down, maybe you have one entry here, another entry here, and another entry here with your stop loss, somewhere down here. Meaning if price comes down, you're getting a better average entry. So now your average entry is actually below your initial first entry. Meaning if price goes up, you make more, and if price hits your stop loss, your average entry is lower, so you're losing less money. Now, the only downside to dollar cost averaging is that if it hits your first entry and goes up right away, well, you're missing out on some profit. But DCAing is a way to go if you're entering limit orders. Now, a market order is when you enter manually, so you're sitting in front of your computer, you press enter the trade at the key level. So the level doesn't actually change. The only thing that changes is how you enter. When you're entering via a market order, go down to a lower time frame and look for bullish divergences. Now, if you're wondering what this indicator here is on the bottom of my screen, as well as the indicator that I pulled up on my chart, these are my own custom trading algorithms. So if you guys want access to my personal setups, my personal analysis, as well as the easy algo trading indicators, be sure to click the first link in the description below. These are the only indicators that I would recommend. 99% of indicators don't work because they aren't price action focused. Our indicators are strictly price action focused. And I never enter a trade without first seeing the momentum oscillator. Only 1 hour time frame, I can see that the oscillator is approaching that oversold zone, meaning that I can start to look for long positions once price reaches my key level. Next, I'm going to jump down to a 15-minute time frame. This is the time frame I'm going to enter the trade. I want to see price make a lower low into this level as the momentum oscillator is making a higher low. This discrepancy in price and momentum is referred to as a divergence. So maybe the trade will look something like this, where we get that one more sweep, bullish divergence confirmed. That's where we're going to enter the trade, and our stop loss below that low, again, targeting the high. The benefit of entering on a market order is, number one, you're waiting for confirmation, because if you set a limit, sometimes price will just dump right through your level. Now, downside to entering via a market order, you need to be on the charts trading. If you're working a 9 to 5, or if you're doing something with your family, that's where limit orders would come in handy. Now, if you're brand new to trading, I'd recommend start trading with limit orders. Get in the habit of identifying these key levels and zones. Get in the habit of stacking your confluences. And again, if you need extra help finding setups, finding levels in advance, join my pro Discord. I will literally give you guys the setups that I'm looking at personally. Avoid trading on low volume days such as the weekend and also news days. You definitely do not want to be in any positions during FOMC. These are minor things, but it can wipe out your whole monthly profit if you're in 10 long positions during an FOMC day. So just avoid news altogether. It's not worth it. Another thing you need to understand going into the new year is that losses are inevitable. Yes, people make money trading, but they also lose money. Even the best traders in the world lose trades. It's not possible to have a 100% win rate. Also, I highly recommend joining a network or community of other traders. Obviously, I recommend my own group, but even if it's not my group, just get in a network with other traders with a common goal. It's super motivating when you have a group of people around you that are looking at the same things you are, giving you insight that you might not see yourself. And this is what a lot of traders neglect. I think if people just got themselves in the right communities first, it would literally save them months and even years of trial and error. So why even go through all that shit if you can just join a community and avoid all of that bullshit that you would eventually have to go through? Also, it's important to have the right information. Yes, trading is technical analysis. It's reading the chart, it's reading the price action, but you can't deny the fact that information is key. If you have the right information and know the right people, you'll be so much further ahead and you will make way more money than people who don't have that. At the end of the day, trading is player versus player. It's you versus other people. When you buy a coin, you intend on selling that coin to someone else. Someone gets wrecked when you make money and vice versa. It's a zero-sum game. You're either winning or you're losing. Trading is a business and you need to treat it like one. That is a basic guide on how to actually make it in trading in 2025. If you guys enjoyed this video, make sure to leave a thumbs up. Comment if I helped you guys down in the comment section below. Make sure to subscribe to my channel for more trading content. I'm gonna be dropping a lot of sauce on here for you guys. That's it for me. I'll see you guys next video.